You've got over 100 PE ratio, and they've got content and they've got a lot of good things, but they're still in a negative cash flow position. And so I can't call, you saw that stock this morning down over 50 points. I can't call Fred and Ethel, who have been clients of mine for years, and say, we've got this Netflix thing in your portfolio and it's down 50 points today. I'm sorry, it doesn't work when there are so many other options with really good balance sheets, really good earnings, reasonable price to earnings ratios. You just can't go to the thin branches for returns and not understand that there's going to be a significant downside at some point. Maybe Netflix does great, but this kind of behavior in the stock shows me that it really is inappropriate for a conservative portfolio.
There are a fair number of people on the street, Kevin, who would say that among the stocks that are core holdings in your portfolio for the long term, Netflix would be one of them, along with Amazon, along with Alphabet, along with Microsoft. What's your view on Netflix? Speculative or core?
No, it is core, it's a core holding because it's changing an entire industry. But here's the issue about Netflix. Yes, it adds volatility to portfolios, and certain portfolio mandates won't go to that level of vol. But if you have been a Netflix investor now for the years that it has been changing, you're pre-programmed to take drawdowns as high as 32%. The truth about the company is, and again it was demonstrated yesterday on the call, they're no good at forecasting their sub-ads. They're no good at forecasting the downside or the upside. They blow out their numbers. They miss forecasts. When you're ahead of your numbers by 8%, 9%, you're actually not forecasting very well. And people are used to that. So frankly, it doesn't really matter at the end of the day, quarter to quarter. It's when the narrative changes, when all of a sudden sub-growth is consistently slowing for 3 quarters in a row, then reality strikes.
I'm confused because I think of you a guy who wants to get paid dividends. And there's no dividend as far as the eye can see.
There are mandates where people want top-line growth, and you only find that around the world in internet and e-commerce. If you want 30% growth, you can't find that in traditional names. Right now, and it's been consistent for almost a decade, there's a sector in our stock market and the global market where people do not value companies based on free cash flow. They value them based on revenue growth, with the assumption, and Amazon's the best example on earth, that at any time they want, they can turn the spigots, slow down the marketing dollars, and cash will rain from the sky like rain. That's true. They've never done that, but people are willing to value the company based on the ability that they could. There's about 50 companies like that around the world. On average, they're 250 billion market cap each. That includes, Tencent. It also includes Alibaba, includes 58.com, and our domestic names. They're a basket of companies, and they're institutionally held everywhere.
Michael, I want to get back to this idea, though, that Netflix is not the kind of buy and hold stock that you would hold for the Mertzes. I mean, I would think that even if the stock is high in volatility or high in valuation, this is the prime candidate for a long-term hold because you're holding through these bouts of volatility. And in the long run, the trajectory has, in fact, been higher. I mean, it's speculative only in so much as you think that Netflix and what they've done to the industry is fleeting. Do you think what they've done to the industry is fleeting?
No, I don't think what they've done to the industry is fleeting. And I think, it's what you pay for something. And if you're an investor and a long-term investor, you have to have a clear discipline. So if you look at Facebook if you look at Google, they do have the balance sheets. You do have the growth. They've got the balance sheets. And these are names that I can own in my portfolio. I do own in my portfolio. If I've gotten in trouble in the past when I've reached out for those thinner branches to say, I really like the concept. There's really no there underneath yet. And so I like I like what Netflix does. I have Netflix. I watch stuff on Netflix, and yet I can't justify the valuation. Sticking with my rules on valuation has kept me out of trouble for 30 years, and I'm going to stick with it. I can grow my money other places.
What about Bob Pisani's premise, Kevin, that the market can still go up even if FANG were to fail? There's been all this concern that the breadth is just too narrow. It signals that eventually we get a pullback. How do you feel? I mean, can this market move forward even without these names? I
think that would be very difficult. I'll tell you what, the handoff to financials, which was the narrative in January, the idea that, okay, everything else is going to take a break and we're going to hand the football over to financials with a 2% dividend yield at the time, that's actually been a very bad investment. You're down almost 11% in some names. this is a different market. Every market's different every cycle, but this idea that financials are going to come back and lead the charge and FANG will no longer be where capital flows. The trouble with financials is they have no growth in their loan book, the core of their business. Maybe it's because of tax reform. Maybe it's the fact that there's a lot of free cash flows as a change in cap spending or whatever. Companies aren't reaching out to banks saying, I want to borrow more money from you. Maybe it's deregulation that's too slow. But every time I look at every number from every bank reporting, I look at the loan book and saying, you can hear the CEOs talking around this issue. They're doing a great job managing their businesses. But the banks today are not what they were 15 years ago. So are you saying the market
can't rally without tech, without the leadership of technology?
I think the rest of this year, if we're going to continue to see new highs, it's going to be led by FANG. Why? Growth, growth, and growth. Right. Banks are not growing anymore.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.